Sanjay Nayar, welcome to the show. Looking at the way the world markets are, and the Indian shores are actually soaring on that list in some ways. If you had to pick up 3 themes that are going to drive India in the global markets, what would you pick today?
Drive India, okay. Well, I think one is clearly the whole infrastructure story. I mean, that's clearly something that India needs. India needs to spend on, and I think it'll have an impact even for global capital, because we need that in addition to private capital. I think the second theme would be just the Indian consumer. I mean, the Indian consumer is just a huge thing. Again, don't want to bore you with statistics, but with the demographic shift, the whole workforce increase that's going on, and just the spending and the eating patterns that are changing, I think it means a big deal for, again, local and international investors. And I would say third is the fact that you have to look at some areas where India has a lot of things to still do and is lagging behind, like education and skilling people. Right. And just look at one end, you have, I don't know the numbers, maybe 60 million of people surplus in agriculture and a huge shortage on vocational and engineers and graduates. Again, there's a huge gap that one can fill, and again, I think it means a lot in terms of where both the Indian and foreign capital could really play a role.
Does the current rally in the market justify these themes and the kind of money that is coming in?
Well, in a way it does. I mean, if you look at the rally right now, it's in a way, obviously, in the large caps. It's there in certain areas like real estate and commodities and, of course, the banks. But I think it's giving investors a lot of confidence that these markets are actually, brimming with volumes, turnover. Private capital has managed to exit as well. So I think actually investors are quite confident. And if you pick up these 2-3 new themes and you can develop the right business models, I think it's going to actually attract high quality capital towards this.
So the quality of capital and the kind of capital is my next question. When you look at the kind of money that's coming in, we're already topping $20 billion in foreign institutional inflow. That kind of money, does that scare you or does that make you more confident?
Well, as of now, it scares me rather than make me sanguine. I think, and the reason is that the quality of capital, 80% of this or maybe 85% is really FII money. Now, all of it is not hot money, but I think a considerable portion is pretty short-term orientated. And I would say for the first 6 months of that number that you mentioned, probably no more than 6 is private equity capital, and I'm sure there's a lot of FDI on the side, which is not here. Now, there's a big contrast in the kind of capital that private equity brings to the table and the kind of capital coming through the portfolio flows. So I think...
But portfolio flows, if they are, and they're likely to remain for some time because that's driving up the markets beyond these levels, is it likely to be something that one would worry because it could go off suddenly? And would that be your big fear?
Yes, that's the fear, that can turn on a dime if there's a global crisis or a risk aversion. But I think the larger worry I have is that India still is an attractive destination. So the money, I think, could sustain. May not be at 20 billion level, maybe a little lower. The question is of the absorptive capacity. You've got to be able to convert this into capital formation and into capex. And if that's not happening quick enough, then even if it's good quality money, I think it's just going to create asset inflation. And I think that's the worry I have.
What about valuations? You think we've actually re-rated them back here in India? I mean, the kind of money that's come in, and if it does continue, then there is a chance that we would re-rate ourselves at a level that will be comfortably above 20,000 on a Sensex, just to use a barometer. Yeah,
I don't know about the index, but I think we're trading at 19-20 times forward earnings, and that's pretty steep by any count. And even if this translates to something like 20-25% net income growth into perpetuity, that means that a lot of things have to go right for companies and for businesses.
And then are you skeptical about those things going right then?
I think if anybody can do it, obviously Indian private sector can do it. But having said that, there are constraints that these companies and businesses face from just the environment around it, right? The usual infrastructure, governance, other issues. So I think that the larger worry is that if people may be using a very low discount rate for our markets. And I wouldn't blame them because debt rates are negative, equity rates are what they are. So I think there may be a bit of mispricing of risk, and which may or may not really translate into reality, which doesn't mean that India is going to see some bottom fall off, not at all. But I'm not sure that you can sustain 19-20 times forward earnings.
But on the flip side, if earnings growth remains around 20 to 25%, which there is an expectation of, then there should be no reason for this sort of a rally to sustain?
There should be no reason except for the fundamental issue as to where is the capital coming from and for what reason.
Okay.
That's about it. Because one needs to see a lot more local participation from local mutual funds and local retail.
Which are actually seeing redemption right now.
That's right. So I think you've got to see the savings in the country, which are at a pretty significant number, like 35%, being intermediated into the real sector, and not just the dependence on capital flows.
What could trigger a global shift in this whole bullishness towards India? I mean, what could it be? What could be that turning point that could get the money out again?
I can't think of anything India-specific negative, but overseas a lot of things could happen, which might again have a kind of a risk aversion.
Like?
People talk about. I mean, again, the jobless numbers yesterday were shade better, but nothing great at 455,000 in the U.S. Clearly, there is anemic growth in Europe, probably barring Germany. There's a whole currency issue going on right now around the world. So I don't know what it is, but maybe if there is an event or two which then takes capital away from risk assets, I think that could hurt. But India specific, I can only think of positives right now, not negatives.
Let's talk about the latest one, actually, Avanta Power, where you've put in over 200 crore rupees. What's the story? Infrastructure play there?
Shaili, on that one, I won't comment as of now. So we should talk about that later.
Okay. So let's talk about existing ones. Cafe Coffee Day is a consumer play.
That's great. Yeah, no, I think Cafe Coffee Day is a great example of a combination of a world-class entrepreneur who has built, over 1,000 cafes in a country which is not easy to build out, 1,000 outlets in over 120 cities. And I think something where there's a great thesis that the Indian demographic shift is going to drive people going to these kind of places where you can network socially, you can hang around, you can have coffee, eat some good food, and I think that reflects very well on the whole Indian consumer shift that's going on. Cement, Dalmia Cement, again a great example, great family, great private enterprise.
Needs a scale-up push though.
Needs a scale-up, both organic and inorganic, and again cement as a derivative of infrastructure should do well in the long run. So I think the portfolio is hopefully going to be built up sensibly, slowly, in a very concerted way, with the common underlying theme being that we have to partner with the best people. But in terms of what's going to drive growth, I think we are pretty sector agnostic. Everything is growing. So,
but okay, I know you don't want to talk about Avanta Power in particular. I'm guessing it's not yet finally closed, though we do have many people, including SM Trihan, go on the record on it. But just give me a sense of what the power sector holds for, for investors, potential investors, whoever they could be.
I think power sector is great for infra investors, surely, because ultimately you have to look at the power returns in the long run, where merchant power rates will obviously revert back to the mean. There's a lot of supply coming on across the country, which I think we need actually. So my sense is that you could model power sector to between 14-15% kind of returns, and I think that's sort of a great thesis for infra funds to invest in.
So anyone looking for higher returns, including you, would then bet on the auto space?
Auto space, I haven't thought about any particular space, but we're looking at pretty much all the spaces: healthcare, pharma, auto, telecom, IT enabled, and again, the derivatives of infrastructure. Sure. So.
But there's no doubt, I mean, everybody's talking about your interest in the whole Hero-Honda split story with other private equity players. But what is it that the auto sector spells out in terms of growth? I mean, this year has been spectacular. Late last year was spectacular as well. Is this growth here to stay for some time?
Look, I think auto growth is going to be huge, again, driven by the demographic shift with the stimulus that is going right down to the farm economy, the way people are, upgrading what they ride. The whole urban expenditure is increasing, the number of urban households are increasing. You juxtapose these two things and you have an explosive effect in terms of demand on things like mobile telephones and autos. So I think that's going to be a pretty significant driver. And secondly, as a mode of transport, I mean, two-wheelers are going to be pretty interesting, and the low-cost four-wheelers.
So it's obviously a sector that KKR would actively pursue.
I mean, look, as I said, we'll be pursuing all sectors that are high growth.